All right, guys, welcome back to another video. My name is Nathan Williams. I am the developer of Arrow. I hope by now you guys are continuing to enjoy trading with the Arrow software. I hope that you're starting to see that as we add additional strategies, you see that we're building into a true trading system that allows you to catch pips at different times of the day based on your schedule, as well as to compound or add to the pips you're already catching utilizing strategy number one. All right. So today's strategy, which is strategy number 4, is the money zone breakout. It's a very similar strategy to strategy number 3, the Asia session breakout. However, this strategy works no matter what pair it's on. All right. And so let's jump into it. First is we'll talk about what the money zone is. What is the money zone? For those who don't remember, you can go back to the actual video, video number 1, where I talked about the foundation of Arrow and just what everything on the actual Arrow software is utilized for. The money zone is a gray shaded area that happens for 12 hours of the day. So for 12 hours of the day, over 80% of all of that $6.8 trillion a day is traded during that 12-hour time frame. Over 80% of it. All right, that is the best time to trade because that is when the market has the most liquidity in it. You want to trade when the market has the best liquidity in it, or the most liquidity, because your spreads are typically lower. Market is truly trending and not just ranging. Ranging means it's just going sideways. Trending means it's either going up or down, which gives you the best opportunity to catch positive pips. All right. And so the money zone, if you notice, some days it's tall, some days it's short on the chart. And we'll go over that here soon. But what the money zone represents is the HOD and the LOD. Now, what is HOD and LOD? HOD stands for high of day. LOD stands for, you guessed it, low of day. The high of the day and the low of the day, or where was price at its highest for the day and where was price at for the lowest of the day. Typically, the high of the day and the low of the day will both be made inside the money zone. Most days. Every now and then, the high of the day or the low of the day will be outside the money zone, but most days you will see that the high of the day and the low of the day are made inside that 12-hour time frame, because that's when the market is most liquid. All right, liquid. Now, the part of the money zone is typically the first 6 hours of the money zone, which is London session. Typically, London session, you will see the high of the day or low of the day made, or both, during London session. Reason being, London session is where majority of the volume is. It's the biggest session. All right. Now, that's when they're actually typically made. The first 6 hours of the money zone, so the first half, is when you will see one or both highs or lows of the day created. All right. But why is this important? It's important because the institutional traders, the market makers, they utilize the highs of the day, the lows of the day for either breakouts or fake outs. All right? They utilize this to break out into a continued uptrend or downtrend, or fake out. So they can fake you out, take your money, and go the opposite direction. That's how the game is played. It's dirty, but that's how they play it. So now we need to know how to defend ourselves, and Arrow will show you the way. We are going to jump into it now so I can show you how to trade the money zone breakout. All right, we jump into the chart here. We're on the Great Britain pound US dollar M15 chart, so minute 15. And for those who are wondering, you can see here the shaded area. These are the money zones, all right, for each day. I know we're in a different day from the standpoint of these vertical lines here. These vertical lines dictate every 24 hours. So every 24 hours, when it passes that line, we've started a new Forex day, all right? And so here is the rule. Number 1, always trade in the direction of the trend and always trade inside the money zone. So what do I mean? Great question. So we can clearly see here, we're in an uptrend. Great Britain pound US dollar. We're in a uptrend now. The pound pairs all last week were in a downtrend. Now they're in an uptrend. All right, started this past Sunday. Now, when they're in an uptrend, you do what? First rule is trade with the trend. Great, they're in an uptrend. We know that. Now trade inside the money zone. And so the rule is set your horizontal line here at the top of the money zone and wait for the first candle inside the money zone to break above this line. So the first candle inside the money zone to break it. Why the money zone? Well, we talked about it. That is when the most liquidity is in the market. All right. So let's zoom in and look at it. Let's zoom in and look at it. Look what happens. If you'd got in here, it broke the top of the money zone, but it's outside this money zone, and it dropped on you 56 pips. We already know take profit is 20 pips, stop loss is 40 pips. So if you don't follow the rules, you have an opportunity of losing. All right. But if you follow the rules, you have a higher probability chance of winning the trade. And as you can clearly see here, the first candle that closes above the money zone for previous day, there's no drawdown, and it runs up for over 100 pips. That right there is 108 pips. It hit its highest point at 118 pips. You only needed 20. Look at that. You got 25 on the first candle. You got in on this candle and got 25 pips. So literally in, 30 minutes, because there's a smaller candle here. You got in on this candle, 15 minutes sat still, and then by the end of 30 minutes, you're up over 25 pips. You're done. You are done. All right. You took the trade inside the money zone, and you waited for it to break the previous day's money zone, the high, and you traded in an uptrend because we know we're in an uptrend. All right. So now we do what? Now we go to the next day. We go to the next day, and you can clearly see here inside the money zone, we did not break the high of the previous day. All right. So now we're looking at this day. Nothing broke. This money zone price broke previous day's high. So now we're looking to see what happens with this day. Nothing happened here. That's fine. It happens. We don't care about the low. It broke the low here, and we don't take that trade because we're in an uptrend. You take this trade, you lose. Look at that. It went 175 pips the wrong way. So if you took a sell here because it broke the money zone, you are wrong. Trade with the trend and inside the money zone. All right. So we wait. Great. We wait. And look what happens. We're going to take this money. We're going to take this horizontal line. We put it here. Wait till we get inside the money zone. Boom. We're inside the money zone. And the very first candle inside the money zone is above the previous day's money zone, which closes down here. So we get in down here. We have 8 pips drawdown. So it went 8 pips the wrong way because we're in a buy. And then it ran up over 95 pips. Trade with the trend inside the money zone. Let's go look at another pair, Euro GBP. So that was the Great Britain pound US dollar. Now we're looking at the Euro Great Britain pound. We see we're in a downtrend. More red zones than green zones. And look what happens. Same thing. Set your line here. And look at that line. The low of the day is a natural level of support and resistance. Look at that. I put the line there, and look what happened. Price respects that line, that low of the day. Price respects the low of the day. Price broke above it and came right below it because we're in a downtrend. There was no true breakout. This was a fake out. A lot of people get faked out by this. Oh, it broke the previous day's high. Get in the buy. No, sir. We're in an overall downtrend. Look at that. You got faked out and lost a lot of money. All right. Stick with the trend. All right. Stick with the trend. So this day here, here's the previous day's low. We know we're in a sell trend. First candle inside the money zone. Below this line, we trade. And you can clearly see the very first candle is below, inside the money zone below there. We get in. It's got 2 pip drawdown and it drops 65 pips. We only need 20. All right. Look at this again. Downtrend. First candle is below. All right. We're in there. All right. We had a 40 pip stop loss. We got stopped out. No strategy is perfect. All right. So we lost this trade because we had a 40 pip stop loss. It went to 40 pips. But you clearly see the overall trend went down. All right. So we had the trend correctly, but this is what happens in the market. So depending on your entry, depends on if you got stopped out or not. You might have been able to survive that if you had a entry closer to the high of the day. All right, or outside the low of the previous day. All right, and then another strategy here, or another rule is same as before. If you do not have 20 pips room to the next zone, we know we're looking for a sell. So if you don't have more than 20 pips room to the support level, don't take the trade. Well, clearly we do here. We got 34 pips here, and you can clearly see here we dropped 27. So we won this trade. It only went 11 pips the wrong way, and then it went 27 pips the right way. So for the last 4 days in a row, we won 3 out of 4 trades. It's not bad because you're going to add your bounce, arrow, go trades in there as well. This is just an additional strategy you can utilize to catch pips. I hope you learned something valuable. Please stick to the rules, and I'll see you guys in the funny papers.